everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. So you can see, I'm still in the mountains, where it's still cold, and more snow on the way. Yikes. The markets are going through a bit of a consolidation as they try to figure out how to handle this new hawkish Federal Reserve that we have. In fact, in Chairman Powell's confirmation hearings this week, he said that raising rates was a must to offset this rising inflation. Isn't this the same inflation that he was telling us was transitory not too long ago? Well, the CPI number came out, and it was hot again. The December retail sales came in, and they were disappointing. The holiday season, disappointing retail sales, what is that going to mean for earnings coming up this quarter? Let's take a look at the charts. At the time of this recording, it is late on Friday evening, so the futures market is closed. In the intro, I said the markets were going through a bit of a consolidation, and you can clearly see that on the charts. In fact, are they starting to form a bit of a symmetrical triangle here? Right at the end of a wave 5. So as you know from Elliott wave rules, when you complete a 5-wave impulse pattern, you normally go through a corrective phase. Triangle would serve as that type of corrective pattern. We're going to have to see a little bit more data to know that that's actually what's going on. But by the time we chat again next week, we ought to be able to see if this triangle is going through formation. Talking about those levels, we're right in between the support and resistance, kind of in no man's land, if you will. We're going to have to get back through 470 here if we're going to make a meaningful run to the upside, which is pretty solid resistance now with as many times as we've been bumping our head up against that wall. But you can also see that, or make an argument that with 470 as resistance, it's kind of an ascending triangle, maybe more than a symmetrical triangle. Regardless of the formation, consolidation occurring right here at that 470 level. If we fall back to the downside, and as we put the 10-day moving average on the chart, you can see that we've closed back below the 10-day moving average. Interesting thing about the past two trading days was in yesterday's trade, we opened above the 10-day moving average and closed right on the 50-day moving average. In today's trade, we opened below the 50-day moving average and closed dead on the 50-day moving average. So back-to-back days, completely different structures, but finishing right at the same point on that 50-day moving average. If we don't hold here and we start to drop below the 50-day moving average, we do have some support down here at 450 as we talked about in the last recording, and if that can't hold, then it gets really interesting. We start talking about 430 and levels lower, but right now it just appears that the market's kind of trying to figure out its footing on whether or not we make another run to the upside, or is that it and lower we go. Thought we'd look at the 10-year because it rebounded back to the upside today. We talked about how it had gotten overbought away from the 10-day moving average with this vertical move that the market didn't like at the beginning of the week and the end of last week and beginning of this week, and that coming down to test this. We talked about this in TradeFinder Tuesday night. And by the way, if you haven't signed up for TradeFinder before, please do so. You can use the link here underneath the recording or go to our website at ewotrader.com. It's free. We talk about the markets every Tuesday night. We look at trade ideas. It's a lot of fun. Live Q&A, etc. Love to have you. But we talked about this in the Tuesday Trade Finder on how we'd broken above this level and it separated from the 10-day moving average and coming back down, testing 17, allowing the market to catch back to the 10-day moving average made a lot of sense. And in this case, the market did it. The market doesn't always do what makes sense, but in this case it did. And so we've bounced off that 17 level today and off the 10-day moving average. So perhaps in this wave 3, we're ready to move higher in rates. What will that mean for the markets? As I said in the last recording, I think the market can handle it as long as it's not too vertical until we hit that 2% number on the 10-year. I think the market may struggle with that a bit if it doesn't prior to that. Interesting on the dollar, you can see that the dollar did bounce today, but it had gone through this consolidation following the run up in this wave 3 and then broken down pretty significantly. But note the move back to the upside today. Go back and look at the 10-year again. 10-year bounced up, that added support for the dollar. So perhaps we just had a normal wave 4 correction in the dollar and we're getting ready to move higher from here. But we're right at, or pretty close to a 38.2% fib correction there, which could be strong footing for the dollar if it wants to move higher. It'd be very surprising to me if the Federal Reserve begins raising rates, withdrawing liquidity, and that doesn't support the dollar. I think that would be very negative for U.S. economic growth as well as growth globally if the dollar can't hold. I'd be curious as to what you think in the dollar. Do you agree with me? With rates going up, it's going to be supportive of the dollar. Where do you think the dollar goes from here? Is it still going to be the last bastion, the currency of last resort, if you will? Please leave a comment in the comment section on where you think the U.S. dollar goes. this year? Be interested to know. Looking at some other markets, the Qs, this important level here at 380 needs to hold, and it's trying. It was closed below it yesterday, but got right back to it today. But is that just testing a break? It wasn't really a follow-through day to the downside, but we didn't jump back above 380 either. If we don't hold here, then 350, as I was just saying, is the level that we're going to come down to on the Qs. So pretty good way forward here too, that could hold at this level, but 380 is really key. As you can see, it's been support since early November, and could move up and make the wave 5 high there, but we got to get back above 380 first before we start thinking about that, and we got to get back above the 10-day moving average. As you can see, we're below there. 70% wave forward doesn't quite disqualify this 5-wave impulse pattern, but it's pretty close. But this level here really needs to hold. Now, a market that could be really interesting for a potentially bearish trade is the IWM. With rates going up, is that it? Is that going to be the end for the small caps? They've been trading in this trading range between 210 and 230 for the entire year. We've talked about it numerous times. We did give a breakout try there in November to break above 230. Couldn't hold it, came back down. Now you can really see what I'm talking about when we switch this over to a weekly chart. Look at that. Here's that level of the trading range that we've been referring to. We've got a doji on the weekly chart finishing this week. If that falls, if we lose 210 on the IWM, you can see a drop potentially all the way down into this range here around 170, because note the nature of this move higher here. There's no corrective move in there at all. It was better than a 45-degree angle, almost straight up, so there's no resistance on the way down if we can't hold 210. So that could be a pretty interesting downside trade if 210 doesn't hold. It has in the past. We'll see if it does this time or not. Bitcoin continues to struggle with trying to hold this area right in the 40 to 44,000. We said if it didn't hold 44,000, it would go down to 40,000. It did that rather quickly, and then it bounced. And at the time of this recording, it's trading pretty much where you see it on the chart here, around 43,000. And it's trying to get back above its 10-day moving average, as you can see, closing right on it. But if it doesn't hold 40,000, then there's really not much in the way before 32. It'd be a pretty precipitous drop, and I don't think it would take very long to get down there either. So 40,000 needed to hold. So far it has, but we haven't had any sort of a resounding type of a bounce back to the upside. Perhaps if the markets go back into a risk on, I've seen a lot of financial commentary where it was talking about tech stocks are a good buy now. Is that just fodder? Are they right? We'll wait and see. I mean, the interest rates going up is not normally a good environment for tech stocks. Thought we'd look at gold again as well, and gold is forming a symmetrical triangle. We talked about how the SPY may be forming either a symmetrical or an ascending triangle, but there's no doubt that GLD is forming a pretty nice symmetrical triangle. Does that a lot. Traded a lot of strangles over this on this with our volatility strategy in the past. Gold just seems to consolidate, break out a lot, and that's what's occurring right now. You want to look at the 10-day moving average. You can see that trading above the 10-day moving average, unlike a lot of the other markets. And I'd be surprised if with this move higher, we don't go up and test this 174 level. But now that we're forming this triangle, you have to respect the downside. These triangles can break in either direction. There's no rhyme or reason on a symmetrical triangle, and there's not on an ascending or descending triangle either, regardless of what you may hear sometimes. They can break in either direction. That's what the data shows, so you have to be prepared either way. So perhaps a strangle on gold makes a lot of sense. Wrapping things up with the VIX, still remains elevated, as you can see up here, just below 20. We've talked about 15 being that level of support for quite some time, but hovering in the 18 to 21% elevated volatility with this market going through a bit of a consolidation is kind of interesting. So even though we're consolidating or staying virtually in the same place, we're having big intraday swings, which for a short-term trader or option traders, that can be an awful lot of fun. But as I said, I think we'll have more information next week when we get together. We take a look and see if we finish that triangle. So I hope you have a wonderful weekend, great week. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.